Hey everyone, this is Chris. Welcome back to the channel. So just want to give you an update of what's going on in the markets today. And if you're new here, my name is Chris, and this is to help you navigate and grow. So let's start with this. Yesterday we had the scare from Walmart. They're basically saying, hey everybody, we're kind of worried, we're not making money. And the basic gist of it is that people aren't buying the expensive high margin products like your TVs and stuff like that. They already bought that during the pandemic, right? And also too, people are steering more towards the generic brands opposed to the name brands. And this would be like food, toilet paper, these kind of things. Full disclosure, I prefer name brand toilet paper over the generic one, but but that's just me. But it is a real thing though that Walmart is a bit nervous about making money, and that's essentially spooked the market. Now, in terms of other companies reporting today, GM had not a great earnings. You can see revenue is down. What is this? This was 40% down in China, and China is a big market for them. GM is struggling with supply chain concerns. They're also dealing with labor costs, and they're dealing with heavy competition. So, some analysts were thinking that GM was going to challenge Tesla for the EV market. They're still going to challenge it, but it's going to be a tough market. And as of now, just keep it real, Tesla does appear to be the leader. But I do think there's going to be other competitors in there. Ford is in there as well. So is Volkswagen, etc. I don't know about the newer ones like your Rivians or Lucid's stuff, but I think all the companies will be facing the same issues of material cost of putting these batteries in there. Because if the price of the cost to build these things goes up, you got to charge people more money. And if they charge people too much money, people are like, I don't know, I'm just going to stick with the regular cars. So that's kind of the issue, is like, how can you keep costs down while also still maintaining a profit? And it's tough. It's a tough business, the car market. The margins are usually typically very low. Ford is firing people. They're trying to cut costs, and they keep claiming that they're going to be streamlining their EV. I would probably more apt to bet on Ford with their Lightning truck doing well, since Tesla does not have a Cybertruck as of yet. So I think this will be an interesting competition, and we've talked about this also on this channel. I actually think Rivian's probably the better vehicle than the Ford. But to be fair, usually the first run off the assembly line is not very good, and that's any brand out there. Other things that were going on as well, stalwart stocks like Coca-Cola is also Warren Buffett stock. We've talked about this one several times in the channel. These guys, they make money. That's what they do. They're Coca-Cola. They make money. And they got lots of snacks, beverages. They make money if restaurants reopen. They make money. They make money if people are staying home and just going to the grocery store and staying home and drinking Coca-Cola and eating potato chips. They make money. So they seem to be doing okay. And one of the themes you're going to find is the companies that can raise prices and that can pass the cost on to consumers without hurting demand will be okay. See, this is an important point. When you look about, when we talked about with, say, GM, if they raise prices too much, people are like, you know what, screw that. I'm not buying GM. I'm going Ford. And if Ford and GM raise prices too much, like, screw that. If I'm going to pay this much, I'm going to go get a Tesla. So it's different when you talk about something like Coca-Cola, because if Coca-Cola raises prices, it's like, well, I mean, I still like Coke. It's only 10 cents more than Pepsi, so be it. And also, too, this is also a real thing. In the food industry, there have always been, what's the right word to say? I won't say claims. I'll say, not claims, but the government has cracked down on, say, for example, cereal. It was a real thing that Kellogg's and General Mills basically had price fixing in. So they would just charge people whatever they want for cereal, and essentially a duopoly or oligopoly, I want to say. But, there wasn't any competition. Whether or not Coca-Cola and Pepsi have that sort of thing, secretly, I don't know. I'm not accusing them of that, but I'm just saying it is different than the car market, because I think the car market, there is true competition to where if one company raises prices too high, they're just going to go shop somewhere else. And I think clothing is very similar as well, to where clothes really do compete with each other in pricing. So some competitions are real in this market. Other ones, I'm not so sure, like cereal. But the government did crack down on the cereal thing. And, this is a big part of free markets, right? Is, companies, you want to generate a profit, but you also have to compete with your competitor, and the more competition, you guys get the idea. It's basic business. Kimberly-Clark is also boosting prices, and they seem to be doing okay as well. These kind of companies are essential, so they're not going to go out of business. We're not going to stop buying Kleenex. We're not going to stop buying these things. Now, to be fair, though, companies like Kimberly-Clark or Procter & Gamble, they may face some pressure from generic brands. Again, I already stated my opinion on that. I actually prefer the brand name stuff over the non-name brand. Kleenex is an interesting one, because if you buy the cheapy, you guys know this, you buy the cheapy Kleenex kind of stuff, they're too rough. So especially when I have a cold, I get the good stuff. But just for general use, I don't need that good stuff. It's kind of funny. We're talking about Kleenex and toilet paper on this channel. But it is a real thing. These companies make money, and I talk about it routinely. Unilever is also raising prices 11%. So I just keep mentioning to you, I just want you to kind of understand kind of what to look for in companies that can control their supply chain costs, can raise prices, pass it on to their consumers or customers, depending on what kind of company it is, are going to fare better than companies who can't raise prices that much. An interesting industry, just talking out with you out loud, would be something like the video game industry, which would be really interesting. And the question would be something like, let's say EA, because dude, they raise prices all the time. Like if you look at their Madden games, like they'll have like 5 editions of the Madden, and it'll be like the lowest one will be 50, and then they'll have a 70, and they'll have like a $150 tier of the Madden video game. And the question is, how price sensitive are consumers for that? So for me personally, I'm talking about video games, I'm very price sensitive. I'm not paying $150 for a Madden game. Whereas something like, say, here was, say, dishwashing soap, and I go to the store and I have a choice between, dishwashing soap for, say, $3.50 of the brand one, or the non-brand name for like $3. I usually go generic myself, but it depends on the product. Toilet paper, not generic. Dishwasher soap, generic. So that's my opinion. That's kind of funny. Shampoo, not generic. I'm not a big generic shampoo guy either. McDonald's is also raising prices, so they're doing okay as well. The interesting thing about McDonald's, which is going to be interesting to see what Chipotle says, McDonald's was saying basically people are going through their drive-through, and they did well because you guys know this, during the pandemic, people just go through the drive-through because they couldn't sit inside the restaurant. And so they did well. And I just think McDonald's is always going to make money. The thing about McDonald's, like I was talking a lot with you guys, is like health-wise, you can make the case that McDonald's will lose popularity in the future because it's not healthy, right? You can make that case. I think, in my opinion, McDonald's is smart enough to where they would transition over to more plant-based burgers, or offer more salads, et cetera. Theoretically, if the market were to deem that way. So I think, in my opinion, McDonald's won't ever fail, mostly because I think they can always just change their product lineup to match whatever consumers want. And in this regard, too, I thought was interesting is that they were saying they raise prices and people still buy McDonald's. So evidently, McDonald's is doing okay. Their digital ordering, they seem to be doing okay as well. Full disclosure, I have the McDonald's app on my phone. We go there every now and then because they give you basically free stuff. So, I mean, who doesn't like free stuff? And I do like their French fries. I don't work for McDonald's, but I do like McDonald's French fries. So, there's that. Amazon is interesting as well. So I'm not a huge Amazon bull, mostly because it hasn't been a great stock, and it's tough for them to grow. However, it does look like this, and I didn't realize this, is they're making headway in the UK, and actually in Europe in general. They're raising the cost of Amazon Prime. And so for those of you viewers in Europe, I'd be really curious. I just don't know. I don't live in Europe. I don't shop in Europe for, just toilet paper and shampoo and stuff. Is Amazon the dominant way that you guys buy things over there, say in the UK, say in Germany and France? Or do you go to other things, or are there other competition? I just don't know. I'm not European, but I'd love to hear you guys' thoughts on that. For especially people in Europe, is Amazon a real thing? Because for us U.S. investors, if you guys want to make money in the market, there's a couple ways. One is you invest in like a safer company like a McDonald's or Coca-Cola, and essentially you're buying stock, which is an ownership of the company, and they share dividends with you, so you share in the profits of the company. You want to go more growthier, you invest in a company that you think is going to grow, exponentially, and so therefore you're becoming an owner of something that's growing. Amazon is not that attractive because it's not really a dividend company, but some people make the case that it's a grower. I don't think so, in my opinion, but that's just me. Everyone has the right to their own opinion, and I'd love to hear people make the case that yes, Amazon is totally growing in Europe, and they're going to be, a stalwart. I think in USA, it's hard for Amazon to grow. I mean, everyone already has Amazon. How much more can you possibly grow? You can increase fees of Prime, though. And the other thing, too, I thought was really interesting, which is, this kind of news wouldn't be big in USA, but this would be big in Europe for people who are into this stuff, right? Amazon Prime was getting streaming rights to basically Champions Football League, right? So for Americans, we're not into this stuff. But to be fair, I know many Americans that do watch this stuff, and I know many Americans who do play EA FIFA. So it's not like nobody likes football/soccer in USA. Just it's a smaller market than, say, in Europe, which is this stuff is huge. And I'd just giving a shout out to all my football fans out there. But this is a big deal, actually, this kind of stuff, that Amazon is acquiring this content to really make headways in Europe. So that's where there's some growth. Other news from Europe is Putin's not very nice. You guys know that. But they were essentially cutting the gas supply to the other European countries, and it's actually causing prices to spike. I think it went up like 20% recently. And in fact, in the past year, gas prices are up like 5 times, which is really a lot. This is a chart of gas. You can see it's up and down, but it's mostly heading up again. I can't stress this enough, though. We got to get alternative energy. And us as Americans, we need to develop technology that is, makes it so we don't have to rely on Russia. We don't have to rely on Saudi Arabia. And that we can use this new technology, whatever it's going to be, create jobs for Americans and sell this stuff around the world. And yes, I should run for office. I think most politicians are cowards when it comes to energy. But believe me, I get it. I really get it. Saudi Arabia's got a lot of money. So does Russia. Well, not anymore, at least Russia. But I mean, I'm just saying the point is that oil money is real. And I wish we'd have more politicians that stand up for not only American jobs, but for, not depending on foreign countries. So you'll never, I won't say never, but you'll seldom hear American politicians talk bad things about Saudi Arabia. So that is a taboo in American politics, which is so stupid about our politics. So yes, we need to get off Saudi oil, and we need to help European friends over there get off Russian gas and oil. So the way we do that, we develop new technology and we sell it to them. So, hey, you know what? If we're going to do it, we're going to make money. That's very American, right? Other thing too, which is also very important to understanding world economies. So the IMF is basically saying, hey everyone, the future doesn't look so great. They're using the word gloomy and more uncertain. They said that before. We mentioned it before when they did it last month, but they're doing it again. Basically, they're saying U.S. and China are going to be slowing their growth. I've warned you guys about China for a while that it's just not going to be the grower that you think it's going to be. It's not like what it used to be. I was there back in the sort of late 2000s when they had the Olympics, and there was massive growth through the 2000s. And it's slowed. You can't grow crazy forever. The other thing too, which the IMF said, is that they're cutting the growth on India, the forecast. However, according to them, and I was right, I mentioned this one a couple days ago, India is the fastest grower. I would say India and Vietnam are where the growths are in terms of developing nations. Now, I'm just perfectly frank, I don't know enough about India, because people ask which companies. I would just say, if you're going to do India ETF. I just don't know enough about it. Tata Motors was like a crazy runner for a while, but that's a car company, and it's tough. Margins are tough on those companies. So generally speaking, just ETF, you're probably better off if you want exposure to India. But I would say India and Vietnam are going to be your growers around the world, and countries in Africa eventually. Now, Africa's a trickier one. Again, it is a complicated place. There are multiple countries there. And the Chinese tend to invest more in Africa than the Americans. And I'm not sure so much about European investment. I know the European economies are struggling, so I just don't have a comment. I don't know everything, but I do know some of everything. Yeah, this is not a great forecast from the IMF. And then the last thing is, this was a weird bit of news, okay? So if you read the headlines and this is overnight, and this is how Chinese stocks move. You wake up one morning, you're up 30%. You wake up morning, you're down 30%. So it's hard to ever recommend these things, to be perfectly frank. I think, if you do put Chinese stocks in your portfolio, I'd say 5, no more than 10%. Because you just don't know. If you're trading it, go for it, right? As a trader, go for it. But as a long-term investor, it's tough. And this headline is strange. The reason why I'd say it's strange is because they're celebrating that Alibaba is, seeking what do they call it, a primary listing? Yeah, primary listing in Hong Kong. And, the reason why I think this is a sort of misleading headline, when I read this initially, I'm like, okay, so does that mean like they're really going to focus on the Hong Kong shares of Alibaba? And if that is the case, that means they are planning, or at least planning for the contingency that they will be delisted in the USA. And I'm not saying that's going to be for sure, but just when I see this kind of thing, that's what it sounds like to me. And I don't know how people can read this positively. And I read through the article, I'm like, what are you guys talking about over there? I just felt like, I don't know. I mean, all these Chinese stocks are so manipulated by both the government and the media, so it's hard to know what to believe, and just keeping it real with you guys. So again, I read this as negative. If you read it differently, let me know. But the basic gist is that now mainland Chinese people can more easily invest in Alibaba, and that just it feels like for me it's a signal that we don't not that we don't want American money, but that we can't count on American money depending on what U.S.-China negotiations go. So I read this as negative, but that's just my reading, and everyone can have a different reading of that. So anyway, that's what's going on in the world. Hopefully everything's going great with you. Stay safe, stay careful out there, and I tell you over and over again, Series I bonds are really, really good. So that's it. I'll see you next time.